Chapter 3 Charlie Munger. In my whole life I have known no wise people over a broad subject matter area who didn't read all the time. None, zero. You'd be amazed at how much Warren reads and at how much I read. My children laugh at me. They think I am a book with a couple of legs sticking out. Charles T. Munger. Buffett and Munger. A great business person like Warren Buffett needs a fantastic supporting cast. Generally, that includes some mix of family, friends, and colleagues. In Buffett's case, the co-star who rightfully shares top billing at Berkshire Hathaway is Charlie Munger, the company's vice chair. Investors know Munger for his charisma, quick wit, and straightforward wisdom doled out in pithy Benjamin Franklin-style aphorisms. About Munger, Buffett says this, only partly tongue-in-cheek. As for myself, I would like to offer some advice on the choice of a partner. Pay attention. Look first for someone both smarter and wiser than you are. After locating him or her, ask him not to flaunt his superiority so that you may enjoy acclaim for the many accomplishments that sprang from his thoughts and advice. Seek a partner who will never second-guess you, nor sulk when you make expensive mistakes. Look also for a generous soul who will put up his own money and work for peanuts. Finally, join with someone who will constantly add to the fun as you travel a long road together. All of the above is splendid advice. I have never scored less than an A in self-graded exams. In fact, it is so splendid that I set out in 1959 to follow it slavishly. And there was only one partner who fit my bill of particulars in every way. Charlie. Born 6 years apart, both men are Omaha natives. Their Nebraska roots stretch back several generations. As teens, both worked in the grocery store owned by Buffett's grandfather in downtown Omaha. But despite sharing similar childhood experiences in the same city, these two financial luminaries did not cross paths in business until 1959, when they met at a dinner party. Each had already racked up substantial business success and quickly recognized the other as a fellow reader with broad curiosity about the world. In the relatively small city that Omaha was at the time, it struck people as unusual that the two men did not already know one another. Omaha locals now investing with Buffett kept telling him that he reminded them of a lawyer they knew, Charlie Munger. And those who knew Munger often noted that he reminded them of Buffett. Buffett had heard of the Munger family, of course. Charlie's grandfather had been a federal judge nominated by President Theodore Roosevelt, and his father was a well-known local lawyer. And at the party, which was a setup arranged by their mutual friends, the 29-year-old Buffett and the 36-year-old Munger got on famously, dominating conversation at the dinner table. Buffett recalled, "Munger was rolling on the floor laughing at his own jokes. I have been known to do that myself, so I decided there is not many guys like us in the world, and I better hook up with him." Their common sense of wit and intellect would form the foundation for a friendship lasting more than 60 years. The same qualities would eventually inform their cerebral approach to investing. And although Munger's role in their partnership came to be one of devil's advocate, interrogating Buffett's ideas, the two men say they have never in 6 decades of collaboration had a real argument. On the contrary, Munger's probing questions often nudge Buffett to dig deeper into the details of an investment before plunging in. A major benefit of this approach is its help in uncovering behavioral biases that may creep in and unduly influence investment decisions, a topic I explore in depth in Chapter 7. But you wouldn't necessarily realize this from watching the two men in public. At annual shareholder meetings, Buffett and Munger sit on stage together for hours, fielding questions from the audience, while Buffett tends to give long-winded answers to questions, ranging from Berkshire Hathaway's finances to larger global trends in finance. Munger's specialty is quips. He is known for dropping in poignant observations or perfectly timed moments of deadpan humor. They make an entertaining as well as hugely successful team. Munger's background. Munger's position at the zenith of the investing world comes from an upbringing of relative affluence, which aided him in becoming highly educated. But the social historical context of crushing poverty brought about by the Great Depression nevertheless left an indelible mark on the mind of young Charlie. It fanned his hunger for education as a kind of insulation from destitution. And education is what ultimately led to his elite position in the world of finance. I am one of the very few people still alive who deeply remembers the Great Depression, and that has been very helpful to me, Munger said in a 2017 interview. It was so extreme that nobody had any money. Rich people did not have any money. People would come and beg for a meal at the door. Born in Omaha on New Year's Day, 1924, Charles Thomas Munger was the son of Alfred Munger, a Harvard-educated lawyer who made a comfortable living, providing for his wife, Florence Tootie Munger, née Russell, and his children, Charlie, Mary, and Carol. Munger's grandfather, the Honorable Thomas Charles Munger, had practiced law in Nebraska for decades by then, and his example set the career path for both son and grandson. But Thomas had risen from nothing, the son of two school teachers who would give their young son a nickel to buy meat. Munger recalled of his grandfather, "He would go to the butcher shop and he would buy the parts of the animal nobody else would eat. And that is what two school teachers lived on in those days. And the very indignity of it bothered him so much that he was just determined to get out of poverty and never go back. And he did. He got ahead like Abe Lincoln, educated himself in lawyers' offices, and so on. He had to leave college because he could not pay the tuition anymore. But he educated himself, and since he was utterly brilliant, it was not all that hard." Charlie Munger inherited much of his grandfather's drive, especially regarding education, something he describes with extraordinary pride. He had an attitude that was pretty damned extreme. I would say his attitude was that you have a moral duty to make yourself as unignorant and as unstupid as you possibly can, and that it was pretty much your highest moral duty. Maybe taking care of your family came first. He was conventionally religious, so it may have been a religious duty to him. But he really believed that rationality was a moral duty, and he worked at it, and he scorned people who did not do it. Education. Schooling in the Great Depression. Despite the Depression, Charlie's father, Alfred Munger, was able to sustain his legal practice and support his family while Tootie Munger encouraged her children to read. Young Charlie did so enthusiastically. He was particularly enamored of biographies chronicling the lives of illustrious people. And while still a schoolboy, Munger began breeding hamsters to trade with other kids. This early venture into entrepreneurialism and negotiating ended when the boy's stock of hamsters grew too large to manage. With 35 rodents running around the house, Tootie finally put her foot down. Munger graduated from Omaha Central High School in 1941, just when the Great Depression was about to be fixed by the accidental Keynesianism of World War II, as he puts it. Although small in stature, young Charlie participated in 4 years of infantry ROTC in high school and rose to be a second lieutenant. He says, "I was about 5'2". I got my growth late, so I was not your idea of a manly soldier in high school." College and World War II. Although Munger had his eye on attending Stanford University, his father, worried about saving money, wanted Charlie to stay in the area. But both father and son were extremely ambitious men, angling for a college with more prestige than the University of Nebraska. In the Midwest, that meant one option, the University of Michigan. Munger has put it as follows. "What was I going to say? Screw you, send me to Stanford? Well, I didn't say that. I went to Michigan. I have never regretted that at all." At the University of Michigan, Munger studied math and dabbled in physics. But just after 2 years, with the United States entering World War II, the Army sent Munger to study science and engineering at the University of New Mexico in Albuquerque, and then to the California Institute of Technology in Pasadena, en route to becoming a meteorologist for the U.S. Army Air Corps. During the final years of the war, Munger, stationed in Nome, Alaska, served as a meteorologist. He also met Nancy Huggins during this deployment, and they married. He was discharged in 1946. As a school kid, Munger had been seen by teachers as something of a wise-ass. The same attitude was apparent during his military service. He was outspoken. He did not enjoy working on menial tasks, nor did he like taking orders, especially from people he considered to be less intelligent than himself, and he made little effort to hide his feelings. As he tells it, "Well, my senior officers could tell I thought they were wrong, and I tried to hide it, and they could still. I never got in any serious trouble, but who in the hell likes a junior officer? You look over there and he is plainly indicating that he thinks you're an idiot." Well, it worked out all right. I did my work well enough, so they didn't bother me. But it was not a milieu where I was going to succeed. Harvard Law. Although Munger had not officially completed his undergraduate degree, he managed to use his GI Bill benefits to attend law school at Harvard University. Officials were understandably hesitant to admit Munger without a bachelor's degree, but a Munger family friend and former dean of the law school vouched for him. The recommendation paid off. Munger graduated magna cum laude from the Harvard University School of Law in 1948. He was 24. Law was a natural career path, not just because it continued the professional heritage handed down by Munger's father and grandfather, but because the practice of law seemed to offer both a greater challenge and more independence than many other corporate pursuits. He says, "I knew I didn't want to go to the bottom of a big organization and crawl my way up. I'm a natural contrarian. That wasn't going to work for me. And I found that people could tell when I thought they were idiots. And that isn't a way to rise in a big organization." Those surrounding Munger may have seen his attitude in these days as a refusal to conform, but in hindsight, it seems likely that Munger's apparent contrarianism was just his entrepreneurial spirit beginning to emerge. Early work years. Munger, his wife, and his young son Teddy moved to California. Rather than joining his father's law practice in Omaha after law school, he passed the California bar exam and began practicing at the firm of Wright and Garrett. He was thrifty and hardworking, always worried about making enough to support his family. I had no alternative. I had an army of children almost immediately. I painted myself into quite a corner. As the 1950s wore on, Munger began to feel the need for more income. Part of it was alimony. Charlie and Nancy Huggins divorced in 1953, and she kept their Pasadena home. Munger earned an estimated $350,000 in his first 13 years as a lawyer. While this was a very good salary, practicing law was beginning to bore him. Munger found himself more interested in investing in ventures created by his clients. I hated sending other people invoices and needing money from richer people. I thought it was undignified. I wanted my own money, not because I loved ease or social prestige. I wanted the independence. Munger's entrepreneurial ventures. While Munger's intellect was beginning to envision new career paths, his personal life transformed as well. In 1956, he met Nancy Barry Borthwick on a blind date. Nancy was from Los Angeles and had earned a degree in economics from Stanford University in 1945. She was previously married with 2 children, William and David. Nancy loved to serve others and was committed to improving many institutions. She was a modest, quiet, and unassuming person. Munger and Nancy married later in the same year they initially met. By the end of the decade, Munger had begun to invest in the stock market and the electronics businesses of his clients. Still, he did not give up his day job. Not until 1962 did the entrepreneurial bug bite fully. But when it did, Munger struck out on his own in grand style. He founded the real estate law firm of Munger, Tolles, and Hills, later renamed Munger, Tolles, and Olson, LLP, and co-founded an investment firm, Wheeler, Munger and Company, the same year with his old poker buddy and investor Jack Wheeler in Los Angeles. The investment firm purchased a seat on the Pacific Coast Stock Exchange. Within 4 years, Munger had earned $4 million. Their investment strategy was similar to Buffett's. They emphasized arbitrage, cigar butts, and acquired businesses. Cigar butt investing is when you purchase cheap stocks that still have a few puffs left for you to profit from. Graham, Buffett, and Munger all did this. However, Munger was different in that he also preferred quality businesses with strong management and a competitive advantage, a moat. He emphasized that he did not want to invest more capital into a company, but he wanted cash to flow out. This was similar to an investment that he eventually made at Berkshire called See's Candies, which will be explained later in this chapter. 3 years later, Munger had given up the practice of law to focus full-time on managing investments, although he did consult with the law firm on occasion. By concentrating on just a few securities, his fund did well for several years. Munger partnered with Franklin Otis Booth, a real estate developer, and the pair later became investors in Berkshire Hathaway. Not every call that Munger made turned into gold. In 1973, his firm lost 32% on its investments in the stock market due to corrections. Then in 1974, it lost 31%. But he held on, and in 1975, Munger's small investment fund produced a 73.2% return in compounded annual returns. Over the 1962 through 1975 time period, Buffett observed, Munger's partnership generated average returns some 15 points higher than the Dow. Two entrepreneurs collide. A handshake partnership. Munger had met Buffett at the beginning of this period during a visit back to Omaha for his father's funeral in 1959. After their dinner party introduction, the two formed a fast friendship, and when Munger returned to his California law firm, he and Buffett stayed in touch. Each week they spent hours on the phone discussing investment opportunities. In between conversations, Munger often wrote lengthy letters sharing more of his musings. With no written agreement, Buffett and Munger had become de facto business partners. The timing was a key element here. Buffett's longtime mentor, Benjamin Graham, had recently retired from investing, and he felt the absence keenly. Munger provided a new sounding board, and although he espoused a very different attitude toward investing, his personal style reminded Buffett of Graham, honest, realistic, profoundly curious, and unfettered by conventional thinking. An example of this plain-spoken approach comes through in Munger's assessment of the decision to buy the Berkshire Hathaway textile mill. Buffett had been taught by Ben Graham to buy things for less than they were worth, no matter how lousy the business was. You cannot imagine a lousier business than New England textile mills. Buffett should have known better than to buy into a totally doomed enterprise. But it was so damn cheap. We could get a big discount from liquidating value. But where Graham had strictly followed a value investing approach, focusing on bargain basement opportunities, the core of Munger's belief was avoiding such cigar butt companies in favor of well-run firms that needed minimal oversight. As for any lackluster holdings that Berkshire Hathaway already owned, Munger advised Buffett to do whatever he could to convert them into moneymakers or sell them off. This was no minor shift. Graham had been a formidable influence on Buffett, and it had paid off handsomely. The pivot toward Munger's approach is testament to the power of Charlie's mind, as Buffett put it. He expanded my horizons. Munger's influence on Buffett. No more cigar butts. It was Munger who pointed Buffett toward such investments as See's Candies, Blue Chip Stamps, Geico, Coca-Cola, and Gillette, all well-established businesses. Meanwhile, as he watched the textile factory that was Berkshire Hathaway dwindle into obsolescence in 1970, Munger advised his friend and partner on the best tactic for making lemonade out of the proverbial lemon. The only way to go forward from there was to wring enough money out of this declining textile business to have more money than Buffett paid to get in, and to use it to buy something else. This is a very indirect way to proceed, and I would not recommend it to any of you. Just because we did some dumb thing that worked, you do not have to repeat our path. Despite their success as a team, Munger remained modest about what he brought to his collaboration with Buffett. He recalled, "It's true that Warren had a touch of brain block from working under Ben Graham and making a ton of money. It's hard to switch from something that has worked so well. But if Charlie Munger had never lived, the Buffett record would still be pretty much what it is." However, the fact remains that See's Candies turned out to be a pivotal investment for Berkshire Hathaway, even though Buffett was tentative about it at the time, and the idea came from Munger. Here is Buffett describing the education he gained through that experience. "My misguided caution could have scuttled a terrific purchase. but luckily the sellers decided to take our $25 million bid. To date, See's has earned $1.9 billion pre-tax, with its growth having required added investment of only $40 million. See's has thus been able to distribute huge sums that have helped Berkshire buy other businesses that in turn have themselves produced large distributable profits. Envision rabbits breeding. Additionally, through watching See's in action, I gained a business education about the value of powerful brands that opened my eyes to many other profitable investments. Joining Berkshire Hathaway full-time. In 1978, Munger joined Buffett full-time and was named vice chair of Berkshire Hathaway. He has remained in that role ever since. From their first meeting at that Omaha dinner party in 1959, the Buffett-Munger partnership has stood the test of time. The two men share a sense of humor and intellectual curiosity. Their example underscores the crucial importance for success in any entrepreneurial venture of having the right partners. It is particularly valuable when the leaders' differences complement one another. As Buffett has quipped, "When we differ, Charlie usually ends the conversation by saying, 'Warren, think it over, and you'll agree with me because you're smart and I'm right.'" Shareholders witnessed this banter at Berkshire Hathaway's annual meetings. Munger tosses off humorous comments while Buffett waxes wise. Both men, now well into their 90s, have acknowledged that this jocular tone may change after they are gone, but for now they concentrate on the present. Munger observed, "We just do what works as long as it works. And when it stops working, or indicates it is going to stop working, we will stop." I think there is more wise-assery in our meeting than would be appropriate forever. Now I am the principal wise-ass. Munger's views on investing. Sit on your ass investing. Munger is known for his self-taught, multidisciplinary approach to investing. Like Buffett, he looks askance at the narrow-mindedness of traditional methods of business education. Instead, he draws ideas from fields as varied as chemistry, physics, and psychology to lead him toward wise investment decisions. Both Munger and Buffett are suspicious of all the fancy formulas used in academia and insist that you do not need all of these fancy formulas to be a successful investor. Munger insists that his success springs mainly from insights gained through reading widely and extensively. Officially, Munger's method is called focus investing, but he's given it a snappier title, sit-on-your-ass investing. Here is Munger explaining this approach during the 2000 Berkshire Hathaway shareholders meeting. Well, I agree that all intelligent investing is value investing. You have to acquire more than you really pay for, and that is a value judgment. But you can look for more than you are paying for in a lot of different ways. You can use filters to sift the investment universe. And if you stick with stocks that can't possibly be wonderful to just put away in your safe deposit box for 40 years, but are underpriced, then you have to keep moving around all the time. As they get closer to what you think the real value is, you've got to sell them and then find others. And so it is an active kind of investing. The investing where you find a few great companies and just sit on your ass because you've correctly predicted the future. That is what it's very nice to be good at. In addition, Buffett and Munger criticize investment philosophies that emphasize portfolio diversification. Instead, they invest most of their capital in a few well-run companies that meet their criteria for an investment, rather than trying to predict the future based on fads. Munger puts it this way: People have always had this craving to have someone tell them the future. Long ago, kings would hire people to read sheep guts. There's always been a market for people who pretend to know the future. Listening to today's forecasters is just as crazy as when the king hired the guy to look at the sheep guts. Simplicity. Value investing is easy to describe. Invest in assets that are undervalued and be patient. But it takes real discipline to implement. The core of it, as far as Buffett and Munger are concerned, is to keep the process simple. They use the same approach in their management of Berkshire Hathaway itself, assiduously avoiding bureaucracy. Their corporate office in Omaha counts just 25 employees. In Berkshire's equity portfolio, Apple alone comprised 50% of its size, or 25% of its overall market capitalization. The top 5 holdings constituted over 75% of the equity portfolio, even though Berkshire owned over 40 stocks. And though they have purchased 62 operating companies, comprising more than 360,000 employees, they allow their subsidiaries to continue operating as independent entities under the umbrella of Berkshire Hathaway. This provides Munger and Buffett the freedom to focus on what they do well, which is allocate capital. The two have been known to complete billion-dollar business deals in a single day by writing out very short contracts. Their investment process avoids complex algorithms and sophisticated models, even though Munger excels in mathematics. Munger says, "Neither Warren nor I have ever used any fancy math in business, and neither did Ben Graham, who taught Buffett. Everything I have ever done in business can be done with the simplest algebra and geometry and addition, multiplication, and so forth. I never used calculus for any practical work in my whole damn life." Munger further observes, "I can't think of a single example in my whole life where keeping it simple has worked against us. We made mistakes, but they were not because we kept it simple. I would say that the chief advantage that Berkshire's had in accumulating a good record is that we have avoided the pompous bureaucratic systems. We've tried to give power to very talented people and let them make very quick decisions." To keep their investment portfolio focused on a relative handful of great companies, Munger emphasizes the concentration of risk as key to success. Now, at a place like Berkshire Hathaway or even the Daily Journal, we've done better than average. And now there's a question, why has that happened? And the answer is pretty simple. We tried to do less. We never had the illusion we could just hire a bunch of bright people and they would know more than anybody about canned soup and aerospace and utilities and so on and so on and so on. We never had that dream. Surplus cash and repurchasing shares. Munger and Buffett have worked to avoid the pitfalls of herd mentality investing, but they are entirely willing to move quickly when an opportunity pops up that they like. Munger describes their thinking in his typically forthright style. "I don't think we have a master plan of knowing where the opportunities are. We are trying to find intelligent things to do with a torrent of surplus cash. And we've always had a torrent of surplus cash. And we're always looking for intelligent things to do with it. And if we find things that are intelligent to do, we do it. And if we don't find anything, we'll let the cash build up. What the hell is wrong with that?" Necessary for this kind of restraint is an adjustment in expectations. Slow and steady could be the Berkshire motto, but Munger puts it in saucier terms. Well, generally speaking, I think the professional investors have to accept less than they were used to getting under different conditions, just as an old man expects less out of his sex life than he had when he was 20. If Buffett feels that shares of Berkshire Hathaway itself are undervalued, he will authorize a repurchase. Munger notes, "Of course, that ought to be done. If you had a partnership with 3 of your crippled relatives, and one of them needed some money, wouldn't you buy out the crippled relative with the company's money? It's just simple morality. But I do think it's being overdone by some people, and it undoubtedly is being done to prop up values, which I regard as an improper use of the share repurchasing technique." While Munger understands people's desire to plunge into the market and start trading stocks the way he does, he is adamant about warning beginners away. If you take the modern world where people are trying to teach you how to come in and trade actively in stocks, well, I regard that as roughly equivalent to trying to induce a bunch of young people to start off on heroin. It is really stupid. Psychology and mental models. None of the tactics that Munger uses would be worth anything without rigorous intellectual preparation. Both Munger and Buffett are known for reading at least 500 pages a day. They then apply their acquired knowledge to investing, but not in a haphazard manner. Munger, in particular, emphasizes a mental model that addresses faults in human thought processes that lead to poor decisions. Much of his thinking on this was anchored by the work of Robert Cialdini, Ph.D., and his book Influence. Munger referenced it during one of his best-known speeches, The Psychology of Human Misjudgment, which he delivered at Harvard University in 1995. In his talk, Munger summarized specific biases that cause blind spots and get people into trouble. For example, Munger talked about bias from envy/jealousy. He and Buffett agree that it's not greed that drives the world, but envy. This, in turn, causes bad decision-making. Bias from deprival superreaction syndrome, including bias caused by present or threatened scarcity, threatened removal of something almost possessed but never actually possessed, is pretty common in today's investment world. For example, traders will bid up a stock that you may have been looking at purchasing all day. Then at the end of the day, traders make a big push up or down, and you get a sense of missing out. I will address more of these biases in Chapter 7. Despite his avid entrepreneurial appetite, Munger's overall approach to both investing and life is based on limiting potential downsides by avoiding mistakes, rather than chasing moonshot strokes of brilliance. No matter how brilliant you are, his theory says, all humans have blind spots, and if you are doing things that expose you to harm, you will eventually run out of luck. Lollapalooza. Once all the right mental models are in place and their user identifies possible cognitive biases, Munger believes rigorous preparation is essential for helping an investor know precisely when to take advantage of the Lollapalooza effect, something he describes as the point when anywhere from 2 to 4 forces all are driving the investment in the same direction. The Lollapalooza effect, a term Munger coined in his 1995 Harvard speech on human psychology and misjudgment, occurs when multiple tendencies and mental models combine to push a person to act in a certain way. This makes the Lollapalooza effect an especially powerful driver of behavior, and it can lead to both positive and negative results. Open auctions are a great example, as the value investing website Guru Focus describes. Participants are pushed to bid by reciprocity. I should buy because I was invited to the auction. Consistency, I have been on record saying that I'd like this, so I must buy it. Commitment tendency, I am already bidding, so I must continue, and social proof. I know that buying is good because my peers are doing it. While the field of psychology has been helpful for identifying biases, Munger says it is not as good at explaining how these biases might interact and manifest in the real world, partly because of the difficulty in running controlled experiments. But the purchase of Berkshire Hathaway itself, when Buffett was already committed to owning 7% of the company, was an example of commitment tendency, a behavioral bias toward acquiring. The death of Buffett's father during the same period might also have influenced his judgment, Munger believes. While capitalizing on the Lollapalooza effect can bring success akin to that of Berkshire Hathaway, a misjudgment can lead to disastrous results, such as when herd mentality goads investors toward mistakenly following trends that reflect irrationality in the market. That happened during the 2007 through 2009 global financial crisis. The herd mentality is every investor's worst enemy. After all, if you sell when everyone else is selling, then you are probably eating huge losses. If you do the opposite and buy when everyone else is selling, then you are likely getting bargain prices for your shares. Thus, before you make an investment, it is wise to think about how various psychological factors might be causing an irrational reaction in the market. Although it is often viewed in negative terms, the Lollapalooza effect can be beneficial too. For instance, Munger points out that alcoholics who participate in Alcoholics Anonymous, AA, have a greater than expected chance of success because people follow the herd, which in this case is full of people also trying to get sober, and they stick to their own commitment to sobriety as a result. Munger saw AA as a system that makes clever use of human psychology. Munger's keys to success. Munger and Buffett attribute their success to being able to recognize a profitable moment and act on it quickly, and they credit this ability to deep preparation in the form of reading and thinking and discussing ideas for hours on end. Intellectual study, rather than mere profit/loss analyses. Indeed, Munger has likened his role at Berkshire to being a colleague of Einstein's. He observes, "Practically everybody works better when not in extreme isolation. If Einstein had worked in total isolation, he would not have been as productive as he was. He didn't need a great deal of contact with other colleagues, but he needed some." What follows are some habits of mind that Munger considers keys to success. 1. Always keep learning. Wisdom acquisition is a moral duty, and there is a corollary to that proposition, which is very important. It means that you are hooked for lifetime learning, and without lifetime learning, you are not going to do very well. You are not going to get very far in life based on what you already know. I constantly see people rise in life who are not the smartest, sometimes not even the most diligent, but they are learning machines. They go to bed every night a little wiser than when they got up. And boy, does that help, particularly when you have a long run ahead of you. I think the right strategy for the mass of humanity is to specialize. Nobody wants to go to a doctor that's half proctologist and half dentist, do you? So the ordinary way to succeed is to narrowly specialize. Warren and I didn't do that. 2. Deserve what you want. The safest way to try and get what you want is to try and deserve what you want. It's such a simple idea. It's the golden rule, so to speak. You want to deliver to the world what you would buy if you were on the other end. 3. Know the edge of your own competency. Munger advocates learning as much as you can, as well as knowing where your learning ends. Do not go beyond that boundary. It's a hugely important thing, knowing the edge. It is hardly a competence if you don't know the edge of it. You know, if you have a misapprehension regarding your own competency, that means you lack competence. You are going to make terrible mistakes. I think you've got to constantly measure what you achieve against other people of achievement, and you have to keep being determinedly rational and avoiding a lot of self-delusion. But after a lifetime of observing it, I think the tendency to be pretty rational about one's own competency is largely genetic. I think people like Warren and I were just born this way. Now, it took a lot of education, but I think we were born with the right temperament to do what we did. 4. Be a survivor. It's not my nature, when you get little surprises because of human nature, to spend much time feeling betrayed. I have always wanted to put my head down and adjust, so I do not allow myself to spend much time ever with any feelings of betrayal. If some flickering idea like that came to me, I would get rid of it quickly. I do not like any feeling of being victimized. I think that is a counterproductive way to think as a human being. I am not a victim. I am a survivor. 5. Understand what you are doing. Of course, I want the guy who understands his limitations instead of the guy who does not. On the other hand, I have learned something terribly important in life. I learned that from Howard Amundsen. You know what he used to say? Never underestimate the man who overestimates himself. These weird guys who overestimate themselves occasionally knock it right out of the park. And that is a very unhappy part of modern life. But I've learned to adjust to it. I have no alternative. It happens all the time. But I don't want my personal life to be a bunch of guys who are living in a state of delusion, who happen occasionally to win big. I want the prudent person. There are microeconomic ideas and gain/loss ratios and so forth that also come into play. I think time and time again, in reality, psychological notions and economic notions interplay, and the man who does not understand both is a damned fool. 6. Invest in trust. If you're unreliable, it doesn't matter what your virtues are. You're going to crater immediately. So, doing what you have faithfully engaged to do should be an automatic part of your conduct. You want to avoid sloth and unreliability. A fast form which civilization can reach is a seamless web of deserved trust. Not much procedure, just totally reliable people correctly trusting one another. That's the way an operating room works at the Mayo Clinic. 7. Learn important concepts across multiple disciplines. You may have noticed students who just try to remember and pound back what is remembered. Well, they fail in school and in life. You've got to hang experience on a latticework of models in your head. What are the models? Well, the first rule is that you've got to have multiple models. Because if you just have one or two that you are using, the nature of human psychology is such that you'll torture reality so that it fits your models, or at least you'll think it does. It's like the old saying, to the man with only a hammer, every problem looks like a nail. That is a perfectly disastrous way to think, and a perfectly disastrous way to operate in the world. So you have got to have multiple models, and the models have to come from multiple disciplines, because all the wisdom of the world is not to be found in one little academic department. That is why poetry professors, by and large, are so unwise in a worldly sense. They don't have enough models in their heads. So you've got to have models across a fair array of disciplines. 8. Just keep swimming. Sometimes the tide will be with us, and sometimes it will be against us. But by and large, we don't much bother with trying to predict the tides because we plan to play the game for a long time. 9. At all costs, avoid self-pity. Self-pity gets pretty close to paranoia. Every time you find you're drifting into self-pity, I don't care what the cause, your child could be dying from cancer, self-pity is not going to improve the situation. And when you avoid it, you get a great advantage over everybody else, almost everybody else, because self-pity is a standard condition, and yet you can train yourself out of it. Self-pity, Munger believes, is steeped in bias, precisely the mindset that leads a person toward making bad decisions. You start rationalizing all these ridiculous conclusions based on the subconscious tendency to serve oneself. It is a terribly inaccurate way to think. And of course, you want to drive that out of yourself because you want to be wise, not foolish. You also have to allow for the self-serving bias of everybody else, because most people are not gonna remove it all that successfully, the human condition being what it is. If you don't allow for self-serving bias in your conduct, again, you're a fool. Life will have terrible blows, horrible blows, unfair blows. It doesn't matter. I think the attitude of Epictetus is the best. He thought that every mischance in life was an opportunity to behave well. Every mischance in life was an opportunity to learn something, and your duty was not to be submerged in self-pity, but to utilize the terrible blow in a constructive fashion. That is a very good idea. 10. Put your unique talents to use rather than comparing yourself to others. I am always being visited by young men who say, I am practicing law and I don't like it. I would rather be a billionaire. How can I do it? And I tell him, well, I will tell you a story. A young man goes to see Mozart, and he says, Mozart, I want to start composing symphonies. And Mozart says, how old are you? And the guy says, 22. And he says, you are too young to do symphonies. And the guy says, but you were 10 years old when you were composing symphonies. And Mozart says, yes, but I wasn't running around asking other people how to do it. 11. Learn how to transform your mistakes. Now, there is a part of life which is, how do you scramble out of your mistakes without them costing too much? And we have done some of that too. If you look at Berkshire Hathaway, think of its founding businesses. A doomed department store, a doomed New England textile company, and a doomed trading stamp company. Out of that came Berkshire Hathaway. Now, we handled those losing hands pretty well when we bought into them very cheaply. But of course, the success came from changing our ways and getting into the better businesses. It isn't that we were so good at doing things that were difficult. We were good at avoiding things that were difficult, finding things that are easy. Values and happiness. Whenever Munger speaks publicly, he talks about his values and how his family instilled them, particularly the virtue of biding your time, but moving quickly with purpose and intent at the right moment. Patience combined with opportunity is a great thing to have. My grandfather taught me that opportunity is infrequent, and one has to be ready when it strikes. That's what Berkshire is. It is amazing how fast Berkshire acts when we find opportunity. You cannot be timid, and that applies to all of life. You can't be timid in marriage when you find the right spouse. It might be your only opportunity to be happy in life. Too many people do not act when they should. It's in the nature of stock markets to go way down from time to time. There's no system to avoid bad markets. You can't do it unless you try to time the market, which is a seriously dumb thing to do. Conservative investing with steady savings without expecting miracles is the way to go. Without Munger's insistence on these values, it is possible, even likely, that Berkshire Hathaway would not have enjoyed the decades of stability and success for which it is known. Wealth. As of 2022, Munger was worth $2.4 billion. Most of his fortune comes from his 15,181 Class A Berkshire shares, which represent about 1.4% of the firm. The $100,000 annual salary Munger draws from Berkshire has not changed in more than 30 years. His role models, Andrew Carnegie and Cornelius Vanderbilt, similarly lived on the dividends of their enterprises. As titans of industry, they considered it a point of pride to support themselves this way. Munger on executive compensation. I think if you're wealthy and own a share of a company, and you get to decide what it does, and whether it liquidates or whether it keeps going, that's a nice position to be in. And maybe you shouldn't try to grab all the money in addition. Asked why Buffett's wealth is so much greater than his own, Munger answers with his standard matter-of-fact style. He got an earlier start. He's probably a little smarter. He works harder. There are not a lot of reasons. Why was Albert Einstein poorer than I was? Philanthropy. Famously, Munger has declined to join Buffett's giving pledge, a promise made among many of the country's wealthiest people to give half their wealth to charity during their lives. He says that he has already transferred so much of his wealth to his children that he would be already in violation of its tenets. Munger has made no secret of his distaste for the folly and stupidity of major philanthropies, preferring to put his confidence in capitalistic ventures with more progressive labor policies, such as Costco. Giving back. Munger has, however, donated enormous sums of money to educational programs, including more than $160 million to the University of Michigan Law School, its legal research department, lawyers' club, fellowships, and residences. He has made major gifts to Stanford University, the alma mater of his wife and daughter as well. In 2004, Munger gave the school 500 shares of Berkshire Hathaway Class A stock, valued at $43.5 million, to build a graduate housing complex, in addition to donations for improvements to the library and an endowed business professorship. The Mungers have given money to the Marlborough School in Los Angeles, the Polytechnic School in Pasadena, and the Theoretical Physics Department at the University of California, Santa Barbara, UCSB, where his son Charles attended. In 2016, Munger donated $200 million to UCSB for state-of-the-art housing. In late 2018, Munger purchased the 1,800-acre Las Varas Ranch on California's Gaviota Coast for a reported $70 million and gifted it to UCSB. Ever the independent thinker, Munger prefers to be personally involved in his major gifts. Now he has begun to accelerate those efforts. He is the chair of Good Samaritan Hospital in Los Angeles and in 2018 donated $21 million. He has also made major gifts to the Los Angeles YMCA and the Huntington Library. None of this would have been possible without the astounding growth of Berkshire Hathaway.